So we're sitting outside of the northwest side of Chicago, and in our market, we have a lot of properties with basements. And obviously, water travels down. So I'm going to ask some questions because it is a little bit confusing to me. And if I'm confused, and I do this every day, I'm sure our clients are confused. So I have a basement in Chicago that's finished, and let's say it's $25,000 to replace it if something happens. What's the difference in the coverages? Because you hear water backup, which if you could explain what that is, versus then you can also get flood insurance. Are they the same coverage? Do you need two different coverages? Can you just explain that a little bit?
Yeah, absolutely. So the first thing to note is insurance is not what gets damaged, it's how the damage was caused. That's how, eligibility for a claim is going to be determined, right? Now, a lot of people in the Chicagoland area will say, hey, my basement flooded, but it's not actually flooding. Something that happens in this area is when we do get into spring, summer, fall seasons, and we have a lot of rain, what'll happen is a lot of that rain will travel into the sewers, and then that pressure can change, the electric can go out, your sump pump can fail, and now you have water coming up the sump pump or any other drain in your basement, right? Now you got a foot of rainwater in your basement. Now everyone calls this, hey, my basement flooded. Anyone who's from the Chicagoland area knows somebody whose basement has flooded, right? That is not flood insurance. That is something that we would call water backup, right? Water backup, sewage backup. Different insurance companies might have a slightly different name for it, but we're all talking about the same thing here, right? Now, this is actually the second most common claim in the Chicagoland area, the first being weather, right? Now, water backup is something that people most likely assume is just going to be covered on their policy, but it is not. It is an endorsement that you can add on to your existing homeowner's policy to verify that you have coverage, right? Anyone with a basement needs to have this coverage, whether it's finished or unfinished, because the damage that a foot of water can create in your basement can be catastrophic. Now, on the opposite side, we're talking flood insurance, right? Now, this is going to be a little bit different. So right now, we're here on the northwest side. We're kind of along the Des Plaines River right here. So there's a lot of flood zones in this part of the city. Other parts, not so much. Now, flood insurance is going to be categorized a little bit differently. We're talking a natural disaster. The whole neighborhood is under a foot of water. We got outside water pouring into the basement. Heaven forbid it gets up to the first floor of your house. No homeowners insurance company covers that. That is a general exclusion from all homeowners insurance. Now, you have a couple of different options for flood insurance. Anyone that's in what we would call an AE flood zone or mandated flood zone, you will be required to carry flood insurance by your mortgage. Now, everyone who is in a non-flood zone or X zone, right, although you're not going to be required, that does not mean that it can't happen, right? And just recently, there's been a couple of places in the city where there has been flooding, right? Now, you have two options there. You can get a policy through the NFIP or the National Flood Insurance Program, or there is private market flood insurance carriers that can sometimes have a better rate, more optional, more customizable coverage. Because essentially, at the end of the day, it's going to cover two things: the building itself and any personal property that you have inside of the building.
Okay.
So that's a big thing. Is a lot of people think water backup is flooding. A lot of people think flooding is water backup,
okay.
right? They are two different things. They need to be, you need to chat it over with your insurance agent once you go under contract and you're talking about the homeowner's insurance. A qualified agent is going to be talking to you about those things, and then from there you can make a decision on which one's right for you.
And I think what people always try to get the cheapest insurance. That's what I see, in the mortgage world. I'm like, what's the cost of your policy? And they'll shop till they drop to get the cheapest policy, but they don't even understand that the cheaper the policy, the less coverage. One issue could bankrupt a client. I mean, that's the truth. And talking about flood with, the way the weather patterns are changing and stuff, it's really something I think all clients should strongly consider is having flood insurance. I know I personally do. I am not in a flood zone, but, we had a weather incident, I think it was about 10 years ago, where we got about 10 inches of water, and I did get flooding in my basement, and that was not backup.
Yeah.
It's just there was water everywhere. So, if you're thinking of buying a home and you really want to make sure you have correct coverage, it's not always about the cheapest insurance, and it's not always about paying the most either. I want to go both ways on that.
Value is the word that we look for.
Value
Making sure what you're paying for is going to protect you where you need it, right?
And let's talk about, too, if you have a claim. So let's go here, because I want to explain about an incident that a friend of mine had where they had damage to their roof. Maybe it was, I think, $1,500 worth of damage, or maybe 2,000. It wasn't anything crazy, and she had a $500 deductible, so she made a claim. And then within a year, they had a water backup. She made another claim, and then they dropped her. And she called me like desperate, hey, how do I find insurance? And then when we walked through it, I said, that first claim, I'm, shocked that the agent even let her make the claim, but she didn't even talk to her agent first. She just made the claim. So I think let's talk about that, about when to make a claim and maybe when not to make a claim, and what the consequences are if you make a claim. So,
absolutely. So in the current insurance market, where insurers have been significantly less profitable, unprofitable than they have in years past, things are becoming more strict, right? Having previous claims will affect your ability to qualify with a large majority of insurers. Now, when you have these small claims, right? Let's say there's $2,000 worth of damage, just like your friend had, right? Your deductible is $500. You get $1,500 from your insurance company. You're now going to have a $1,500 claim, whether it's water, wind, hail, whatever the type of damage was, on your record for the next 5 years, right? Now, the amount that your premium is going to go up for the next 5 years is not going to justify the $1,500 payout that you got from your insurance company. Now, while insurance is here to protect us, it's here to protect us from absolute financial disaster, things like that. You do not want to file a claim for things like, your gutters getting slightly banged up during a storm, right? There's certain coverages or certain things that you as a homeowner should take onto your own hands to make sure that you can have those lower rates, so that when it is time where something catastrophic does happen, like you have a water backup claim, or a storm comes through and completely destroys your roof, or, heaven forbid, and knock on wood, a fire or something like that, you're not, that's what you want to use your insurance for, is to take care of you in those crazy instances, so that you're not going into absolute, financial disaster because of damage to your home.
No, I really think that's a valid point. And hopefully understanding that as clients, even in the automobile world. I mean, I talk mortgages, but I think we should explain everything. It's the same in the automobile industry. If you have auto insurance and you have a fender bender, why would you claim that?
Absolutely. I mean, I've been hearing crazy stories of people getting dropped for filing 1 to 2 towing claims a year, right? Part of this is market conditions on where the insurance market currently sits. So what you can do to protect yourself is you have a couple of different options, right? Anytime you can handle a small fender bender, let's say you back into something in your own driveway, you back into one car into another in your driveway. That happens all the time. If you can handle that, cost out of pocket, I'd strongly recommend doing that, because now you're not going to have an at-fault accident on your record. Now, depending on which auto insurance company you're looking at, they might rate you anywhere from 3, 5 to 7 years on auto insurance. Right? Now, one of the other things is, because auto insurance is also getting more expensive, people are driving again, the cost of cars is skyrocketing. You get into 1 or 2 accidents in a year, probably going to get dropped from your insurer, and then there's probably not going to be a whole lot of people that are willing to take you on. And the ones that are going to take you on, your jaw is going to hit the floor when you see the premium of the rate that they give you. Right? And no matter how much shopping you do, you can really get stuck into something for a couple of years that's going to really, hurt your wallet.
Well, and let's talk leading the auto insurance into the home insurance. When you're buying a house, I've had clients go, oh, I have my auto insurance here. I'll just call, I give them Sean's info, and I'll call and get my home insurance there. And I try to tell them, shop everything, put your auto, your car, your home insurance. Sean does life insurance. I mean, I try to have everything at one place. You get discounts. It's easier for me to keep track. Can you explain like the kind of discount maybe that you get versus not combining home and auto? Is it a percentage?
Yeah, absolutely. So there's going to be a multi-policy discount for pretty much every company. Now, there is some insurance companies that only do homeowners, but let's say you have auto insurance with another company, but through the same agency, you can also get a discount there. Now, what we're seeing in the current market is your auto insurance is actually affecting your ability to obtain homeowners insurance. To restore profitability for a lot of these insurance companies, some of them are only doing bundled business. You can't have a homeowner's policy unless you have an auto. You can't have an auto policy unless you have a home, condo, or renters matched up with it, right? So I know that sounds crazy, but your previous limits, your liability limits on your auto insurance, there's a lot of people driving around with state minimum liability limits. A lot of insurance companies are not accepting those applicants anymore. They're not offering coverage. So that could have been the best rate that you could have gotten on your homeowner's insurance, but you don't qualify for the auto insurance, and now you don't have a bundle, and now you're paying extra on your auto, you're paying extra on your home because you weren't able to get the most, precise package that would have made the most sense for you at the time, due to your auto insurance.
Right. So I think it's interesting that people need to know that. I know a lot of people go to an individual agent. I'm not saying that's right or wrong, but I always say maybe shop at a couple different places if you can, because like for Sean, he can shop different companies for me, or for any client. And that gives me more options, which we do that every year.
Right.
So I think people don't even realize you should be checking your insurance every year. I think I've heard from more clients this past year about their premiums going up, which makes your mortgage payment go up because every year your escrow analysis is done, which your mortgage payment, let's say you have a 30-year fixed, your payment goes up. It's because your real estate taxes went up or your home insurance went up. So I always suggest to clients to, shop their home and auto, make sure you have proper coverage. I think that's like the most heartbreaking thing that I deal with in the business is getting calls like when there's a natural disaster and people they own their homes free and clear, so they're not forced to have insurance and they don't have insurance or they don't have proper coverage and they're looking for a loan now for a home they own free and clear that if they just would have paid the insurance policy, they would have had coverage. So
Right.
I know it's tempting, I think at times to try to cut in certain areas, but I don't think insurance would be one of the areas that
No,
I would
yeah,
recommend
no. I
cutting.
mean, one of the way I look, I like to look at it, and something I've phrased to clients is, let's take a first-time home buyer, for example, right? You've saved up the money for your down payment, you've gotten your finances in order, you're now ready to purchase your first home, right? Now, they're worried about the new costs that they're going to take on having this new mortgage payment and how insurance plays into that. Now, the difference between $20 and $30 a month of not having certain coverages or not having enough coverages is not going to be worth having to pay for all the damage that just happened to your home for the first year. So oftentimes what I advise clients is, especially the first year you buy a home, let's say you're on the edge about whether or not you want to pay for these optional coverages, do it for the first year, right? Because you're going to have other costs, moving costs, new furniture, maybe a housewarming party. There's other things that you're going to want to spending your money on. The last thing that you want to have to allow budget for is a water backup claim that you have to pay for out of pocket because you didn't choose to have it on your insurance, right? Or a service line where the water main that connects your house to the grid breaks in your front yard, right? All of these things factor in. And what I say is keep it on for the first year. Learn how your house operates. Learn how your plumbing is. Learn how the water sits in the summer around your home when it rains. Maybe flood insurance is for you, maybe it isn't. Get it the first year, and if you feel like you don't need it, take it off at renewal and you can save the change then.
Right.
But rather safe than sorry, especially after you've made the financial commitment of buying a house.
Yeah, and let's talk a little bit about, we're going to shift gears into multi-unit insurance. And again, this can happen in any market. We're talking about the Chicagoland market because we're here, but there's other markets that have same situation. So in Chicago, there's been a little bit of an issue with multi-unit buildings that are older. When I say multi-unit, that means like a garden unit, a first floor, a second floor, a third floor. So it's a 4-unit building that, let's say you live in one unit and you rent out the other 3, or let's say it's an investment property and you rent out all 4 units. There's been an extreme spike in the cost of that type of insurance. We've seen insurance rise or barely even attainable in Florida. You have issues on all the coasts, in Texas, California. Talk a little bit about, I kind of mentioned a lot of states. I don't mean to go in that order, but let's just talk about the older buildings in Chicago and the challenges of what's going on.
Yeah, absolutely. So, what essentially happened in the market is when the insurance companies started realizing that they were hemorrhaging cash, super unprofitable, they started to really break down all their policies and take a look at, okay, which ones are we losing the most money on, which ones are profitable, and now we see the market shifting, right? So 4 years ago, a lot of insurance companies took up to 4 units, right? Yeah. Old buildings, flat roofs, it wasn't an issue. It was not something that people really had to be concerned about. A lot of these older buildings, some of them have been, fully gut rehabbed and have modern utilities, modern plumbing, modern electric, and all those things. A lot of the insurance companies have just kind of left the market for these multi-unit older buildings, right? Just because they were paying out on a lot of claims, because a lot of them weren't updated. Pipes were bursting in the winter from freezing. Flat roofs, tend to last like a good time, but when something goes wrong with a flat roof, water, it all comes down, right? So those claims have been very expensive. So now what you see is you have a lot less options, right? Less options means, the premiums are going to be higher. You're going to pay a higher rate, right? So while you used to have a lot of different options, that number is just really drastically narrowed down, and the price of them is significantly higher.
Yeah, no, definitely.
So-
We're seeing that. I would say from, you said pre-pandemic, I would say on a 4-unit, we would be using maybe $200 as the, monthly. And now I kind of use $300 or $400 as my place mark, just so people know that this is a cost that definitely has increased, in the past 2 to
most
4
definitely.
years. Okay,
Yep.
perfect.
Remember, I'm here for all your mortgage needs. While I do renovation lending, I also do move-in ready. So if you're unsure whether you want to get a fixer-upper or a move-in ready, I can handle both. So please subscribe to my YouTube channel for more news, market updates, and opportunities to save money.